for those of you who are unaware, Eurex has now gone to trading 24 hours, or not entirely 24 hours. The new trading hours for Eurex products, well, not all, but particularly the DAX, Euro Stocks and Bund, are now set from 12:15 at night, and it then trades all the way through to 9 o'clock. So where we used to trade from 7 till 9, we're now trading from quarter past midnight until 9. Now, at the moment, volume is exceptionally low in this. We're struggling to get much over 1,000 lots done in bunds, which is a contract that can reasonably comfortably do 1 million lots on a day. So volumes are very, very low at the moment. Now, what I wanted to have a look at is what trade opportunities this actually gives you when the sort of cash session or the proper full-time hours session comes in. And the way that I've come to these ideas, this is something that we've looked at in the S&P. Because the S&P has for a long time had this full overnight session, the S&P runs virtually undisrupted, bar about an hour period in the overnight session. So the S&P trades all the way through the night. This does give you a couple of opportunities, because what this does is, rather than with the current situation in European markets where they would open the next day and then people would have to change their positioning based on what's just happened or based on where we're opening, people now have a chance to actually exit positions overnight. People can manage their positions overnight, exit them, add on to positions, try and push the market to perhaps a more advantageous open than where they managed to close the market. So there's this then build up a positioning that we get in the overnight session. This is the area where I think there's some trade opportunity on this. So what I'll do is I'll talk you through the main idea, or one of the main ideas for a trade in the S&P. Have a quick look at a few questions that I think are very key, and always a good way, if you've got sort of a set number of questions, a little checklist that you can go through, you can at least then come in thinking to yourself, right, I've done the checklist, I know if there's a trade I should be looking at based on what's happened in the overnight session. There's not always going to be. It's something, particularly with something very new, it's very easy to get yourself wrapped up in the idea of, oh, something's going to happen, there's going to be a trade opportunity on this, and start looking for it every day. This will have quite a clear checklist so that you know whether it's even worth looking for a trade on any particular day. I'll give you a little example as well. We'll go and have a look at Bund in terms of what that's done recently, and has not really provided you too much of an opportunity. So let's go. I'll explain the first idea in the S&P, and then we'll go and have a look at how these has played out and so this little checklist. So here we've got the S&P, and what I've got for you, is profile, and then the sessions split up. So what we got here is one day, pretty solid move higher, slight P-shaped day, but generally a progressive move higher. Consolidation the following day, and that shows up just here. So this volume profile just here is this profile here. So this is the cash session. What you then get is post 9 o'clock in the S&P, you then get the after hours session. And what happens in the after hours session? We get bid up throughout the night. That's what causes the gap up. You see the close down here at 72.5s, open right the way back up 81.5. So pretty decent sized gap, around about 9 handles. Now the premise of this trade is that the people buying this move up here are buying it out of hours. They're generally weaker hands. It requires less volume done to actually get the market to move this far out of hours as it would in the middle of the day. So you can then start coming to a few little conclusions here. First up, the majority of people in this session are long. The market wouldn't have gone up if the majority of people weren't buying. So you've got long positioning shown up by the fact that we did not trade below the close really. We traded just briefly below the close. We got down as low as 71s, but that little phase of trade, these hour that we traded below the close is not that significant compared to the amount of time and volume spent up above. So, first conclusion you can make here is there's people long, and what they're looking for is they're looking for a continuation come the cash session. They're looking for when the bigger players come in, when the actual stocks open, that the market will continue in that direction. Excuse me. So, here's the beginning of the cash session. And what happens there? Excuse me, let me clear my throat. What happens here is we get the gap up and the market starts to rally. This looks good news. You know, if you're playing any kind of gap trade, you would look to buy any gap up, stay with the move higher. Now, where the trade really comes into your sort of thinking or your planning is the reference on the overnight high. Can we get a continuation here? Everyone who's been buying it overnight is looking for this to continue. If it doesn't, you then start getting the first few people who've held this move up start coming out. As they start coming out, this gets more people coming out, and move back through the open, then starts getting more and more people out, because as the market goes back through the open, now everyone who's long overnight is going to be showing down on the day because of the way that the market marks. So when you get marked back to market, it will show you now going down on the day. So again, people's screens will turn red. Another bad sign, and could start getting people out. So the idea of the trade here is that on a gap up, you want to be going with the gap. However, if the market fails to then take out that overnight high, and this is where we didn't have this in Eurex, we didn't have a reference point where we could say this is the point we should really continue. If you just had a gap up, you had a gap, it was then a case of does it, doesn't it. Now you've got a reference. So when we don't get a continuation above 84s, then you've got a sell opportunity, and you actually get a retest on this next candle, test back to 84, and then we drop all the way back down and go down to fill that close. And in terms of targets on trade like this, you are looking for, you've got an exposed close there at 77 and a quarter, but there's your main gap close at 75 and a half, and then the actual close price at 72 and a half. So that's the idea of that trade, and this is all based around how people are positioned in the overnight session. So if I scroll it down a little bit, I've got down here a few questions that I think are very important to ask yourself when looking at these overnight sessions. First up, is there a gap? This is when it's generally most significant, and when I say gap, I mean a gap from the cash session to the next cash session. If there is, what this shows you is that people are likely positioned one way or another to actually create that gap. Now, if, for example, the positioning, let's go back up to this S&P one. If, say, we closed down here where we did, and we then traded much lower and then higher and opened up here, whilst there is a gap, you've then got to start considering how a trade is positioned overnight. Yes, there's a gap, but they've traded both sides of the close, so you can deduce from that that there's a little bit more even position, and so less scope for everyone to come out the same way. Whereas with a very clear move higher, anyone looking to come out of this trade is all looking to come out in the same direction. Other areas, this is something really just to note down. What's the range of the overnight session? If the overnight session is entirely within the range of the previous day, well, it doesn't really tell you a great deal. It gives you a couple of reference points, yes, and so a break one side or the other of those reference points may well get a little bit of energy going as some of the overnight position comes out. But particularly in Eurex at the moment, with this very, very low overnight volume, it's hard to see that there's going to be too much positioning actually put on there. Next up, does the overnight session extend range? That's quite key, because if you've got an overnight session that extends range, what will typically happen is the cash market will rarely ever end a move on an overnight session. So this then becomes a sort of mental target for traders, that the market is likely to get back up there at some point. A little bit like a ledge on a profile, that whilst it gives you a target, it doesn't necessarily give you an entry. But the fact that the overnight session is extended range, you've now got something to be looking for as a reference point. If you then break the current high, for example, and the overnight has traded higher, you've got a target on that trade. So it's giving you little bits of extra info, little bits of places to get in, get out of trades. And finally, think about any potential entry points. For this reversal trade, the key areas for an entry are a move back inside the overnight range, and then also a move back through the open, because through the open is the point where anyone who's come in, looked at this gap and started buying it, again, they're going to have their stops through the open. So think about where people are going to get out of this trade. If you're long overnight, where would you get out? If you're long from the open, playing the gap up, where would you get out? So that's the key thing. Think about where you've got entry points, because the entry points going against people's positioning are very key and are usually reasonably easily defined. So with all that in mind, let's go and have a quick look at couple of examples. We've got only a week into this, so we don't have too many examples. We've got pretty much 3, basically. So let's see if we can take anything from this. First up, you've got the DAX on Monday morning. We've got a gap down in the DAX. We actually got a gap down into the overnight session and then trade below there. So it's fair to deduce that the majority of people are short. Yeah, the people will have had to put orders lower to actually get the gap down, and then selling has not turned around. So majority of people are short, or if you've been short all the way through the move down on Friday, are looking to stay short. Now comes the question of where is the opportunity to get long? Well, you don't get a test to the downside, so you don't get this opportunity to buy a move back inside the overnight range. However, we do, on the cash open, get an opportunity to buy through the top of the through the top of the overnight range. As this breaks, then you've got very clear target up towards that close, which we do manage to achieve within 45 minutes. So nice quick trade there. That move there was from 55, if I recall, up towards double O's. So pretty decent sized move on that one. And that's your main trade there. We've got the gap, we've got people positioned, we know where people are likely to come out of the trade. There's then a play to play it back up through that overnight. So the important thing is with that overnight session, if you get a gap, you're looking for a reversal on a failure to keep going through here, and then an attempt to play the move back for the gap. If you don't get any reversal, then assume that that overnight is playing into the next day's trade, and so you then get continuation. Another way to have a look at these overnight sessions is just using them as little reference points for any kind of later moves. So what we got here is this was the Tuesday overnight session, very, very muted. We stayed within the previous day's range. So first up, not too much to be going off here. Don't get yourself too sort of focused on really trying to work out what people's positions are doing if they're inside the majority of this range, because anyone who's inside this day's range here is not going to be too worried by an overnight move that opens, well, bang, straight back where they were anyway. What we did then get is a test out of the overnight range, drop back in, and then once you got this explosive move out, that then created a reference point to come back to. Get back to this overnight high. It's also the point that we really broke out of, and so this is almost a case of the reason for that break partly comes from the fact that this is the overnight range, trade below. Once we get back above, we can't hold inside the overnight range, then we get the rally, and this becomes a reference point the next day. Again, coming into today, we didn't have a great deal, and it's not a case of you really trying to hunt things down, but just a few little points. Very tight value area from yesterday. This is something you would, or from the overnight I should say, this is something that you would be looking at if this were a normal session, and so you'd be looking at that thinking, right, we get inside this, we can shift quite easily through it quite quickly. Not necessarily something you'd be looking for, trying to get an entry point down here in the low 60s. for the break of 88s, I don't think you'd necessarily be able to spot that, to call that. Whereas with this overnight session, now we've got a reference, now we've got positioning here, that if it starts getting inside, it's likely to turn over, and it's exactly what we get. We get the turnover and the run higher. And so you can start looking at these areas and thinking, right, we could have a slightly smoother move through some of these areas created by this overnight session. I'll get another look at Bund, and what I wanted to point out here is don't read too much into it. It's very easy to start jumping to conclusions and really focusing everything on that overnight session. You can see I've got the volume up on here. Not a single price trades over 1,000 lot in the whole of the overnight session. So very, very low volume, and this has gone on all week. Not one price trade over 1,000. In fact, on Tuesday and on Wednesday, you're struggling to buy anything over 300. So again, do we have too much on this? Well, Friday we do. Friday we got the gap up, trade higher, shift of value higher in the overnight session. As soon as we open, sell straight off from this, and so it's going to be a slightly tricky trade. You do get an entry point on the break of that overnight low. This would be something that you don't really have before. Where would you get into this if you didn't get in at the open? You'd be stuck very much without too much of a trade. But through that overnight low gives you a new entry point. You could even play it out of the value area of this overnight move as well. Move back down then to the gap. Beyond that though, Tuesday's overnight session, very narrow, completely inside the majority of Monday's trade, and again Wednesday's overnight session as well. So not giving you too much reason to be taking too much from these sessions, and that's the point I really want to make as well. Don't overcomplicate these things. Don't go hunting for trades if there isn't one. If there's no clear trade, if it doesn't jump out at you, particularly with the lack of volume being done, it's going to struggle to actually create too much movement. There's no point in then hunting the trades down. But it's something that I think is going to grow in importance, and there's still an early trade in it with any of these gaps and turning that position back over.